Arindam, what about CNY right now? How are you seeing that moving and what's driving it?
CNY has responded, I think, to the unfolding growth downgrades or the reassessment of growth forecasts amongst investors because of the COVID lockdowns that are in operation. This has had impact at multiple levels. If you look at consensus forecasts of Chinese exports, for instance, those have started to gently inflect lower, even though trade performance through the first 3 months of the year has been exceptionally strong. Investor flows in the bond market have been very sharply negative. So Chinese bonds have shed about $30 billion of net outflows this year in response to the rate differential switch in favor of the US. And I think these are fundamental changes in the way the BOP is moving. So our sense is that this is not a 2015-16 type moment for China, where CNY has an abrupt move weaker in a way that policymakers will have a hard time controlling. But you have to acknowledge these changes are real. And I think this warrants a reassessment of the dollar CNY path. So we have raised our forecasts for dollar CNY. We now see onshore CNY around 660 or so by the end of the year. And this does imply that the bar for dollar CNY to turn lower and revisit old lows that we came from is now quite a bit high.
And I see that you're bearish on what's happening in India right now. Give us your thinking behind that.
On India, I think this is a pretty straightforward terms of trade or current account story. Based on our economists' numbers, we feel India's current account deficit is now tracking 3% with a distinct risk bias to the upside given where oil prices are. And the currency has simply not responded to that switch in the current account from fairly low levels. It was even the trade balance was even in a surplus at some point last year, to these sorts of 3% plus levels, in large part because the central bank has been smoothing the warranted weakness in the currency. But sooner or later, we feel like there is a catch-up in the offing. And our sense is that energy prices will not moderate anytime soon. So the current account pressures on the FX are not going to go away.